ASML, clearly a big focus for us here in Europe, but the wider tech sentiment story is really interesting. Very negative for big US tech, or specifically Nvidia and those connected with the electrification of the US economy at the start of this week. That was all quite negative. Then we saw something of a rebound in yesterday's session, didn't we? And it seems we're not at the end of working out exactly what DeepSeek does to productivity and to US tech.
Yes, Anna, I think that there's two big things to distinguish. A is the time span between the immediate short term and the longer term dynamic here. Longer term, the dynamics that the past week are really, really immensely bullish for global growth, global productivity. It's about the productivity boom and for global stocks as a result. Now, short term, that doesn't matter as much. Short term, it's all about those earnings. And as you've seen with ASML this morning, that was kind of very, very strong. The other bit that needs to be distinguished is what it means for tech versus the rest of the world and what it means for US tech versus the rest of the world tech. So first of all, this global productivity boom is going to be mainly good for non-tech companies. But it doesn't mean that AI suffers. AI is all driving this. It just means the premium around AI is maybe it's less kind of unique or less specialized, because suddenly through an open source cheap model, the whole world can benefit from this, and it becomes much more about tailoring, software, etc. Much more chance for other people to innovate. So I think the benefits are more widely spread, and therefore the premium shouldn't be so focused on US tech. And that also matters for US tech versus rest of the world tech, because rest of the world tech, particularly in China, Hong Kong, was perceived to have limited access to this kind of AI boom. That is now being broken, and therefore they're going to really, really benefit from that in the coming months. Whereas US tech, absolutely solid companies, will continue to make massive amounts of money, will continue to be world leaders, but their valuation premium is no longer justified distortion to the rest of the world. So this is globally very bullish, but it's much less bullish for US mega cap tech than it is for much of the rest of the world.
Mark, can we transition from a world where US tech, mega cap tech, has driven particularly US indices higher to a world where we see a broadening out, not only in the US, and to the rest of the world? Can that happen smoothly, or is there an air pocket between one and the other?
It's a great question. There definitely could be an air pocket. You know what? There's lots of reasons, short-term issues that can decide that, and sometimes, you know, the broadening out is a multi-year theme. You know, there's a massive. We've 15 years the other way that we've got to kind of unwind in terms in a bullish way, broadening out. There could be air pockets for all sorts of reasons. There could be for micro reasons, just because earnings are terrible. That doesn't seem like the sign this week. Or it could be something that happens on tariffs or interest rates. So you can't guarantee that there'll be no disruption, but it's not necessarily that there has to be disruption. That means that's why we've got to monitor markets every day. But the long-term story is very positive and bullish for global stocks.